Hello and welcome. This is Stocks to Watch on BloombergQuint. I am Agam Vakil. Today we talk about three stocks which are in the news and take them up with our expert. Today we are talking about HDFC Life Insurance, Motherson Sumi, and Axis Bank. And to take us through these stocks, we're in conversation with Yogesh Mehta. He is an independent analyst and he's also the founder of Yield Maximisers. Yogesh, good morning and thanks for joining in. But before I go across to Yogesh, let me address the first stock that is on our list today, and that's HDFC Life Insurance, which we understand now will be replacing Vedanta on the Nifty 50 on the 31st of July. This is on account of the fact that Vedanta, of course, is looking at a possibility of a delisting, and that's the reason why the NSE is replacing the company with HDFC Life Insurance. Yogesh, welcome to the show. And good morning to you. I remember we've been speaking about HDFC Life Insurance on and off in the past as well. What's on the development and the prospects of the company going forward?
Hi, Agam. Good morning. And it's always great to be here on BloombergQuint. Since the new development which has come, and it's my favorite company, HDFC Life. Now, first it has entered into F&O segment, and now it is entering into the second step is in Nifty. Number one, Vedanta getting delisted, and hence they wanted a substitute to replace, and HDFC Life is the right candidate. Now, looking at all this put together, overall the business for HDFC Life is a great one and annuity business. But what we have seen is in pandemic situation that April, May month both have seen 70% of the business coming back to pre-COVID level, and ULIP business is something which is suffering right now. But gradually, new business margin will improve from 26% to 27% in FY21. What I feel is that entering into a candidate into a Nifty 50 will attract more of institution participants rather than the retail one. And the business is on the growth track. So the consistent profitability for this company will help Nifty constitution or Nifty EPS to a certain extent than the Vedanta. So this is the right candidate to be entered into the business where consistent profits are growing with at least 17 to 18% CAGR. Even in pandemic situation, it is doing well. So I believe that embedded value of around 140 to 145 rupees for FY21. It is still quoting at around three times FY21 and 3.5 times FY21 EV to the price right now. So I believe that this should be the best business and best business in HDFC stable, HDFC Bank, and now HDFC Life. This is the third entity entering into this. Putting together this basket will constitute around roughly 19% of the Nifty. So it's great being here, into the Nifty 50.
We move on to the next one, and that is Motherson Sumi. Now, from the news, which suggests that the company is going to take a major restructuring operation. Of course, there are two parts to this restructuring. The first one in which they will demerge the domestic wiring harness business and also list it where shareholders of Motherson Sumi will get one share in the demerged entity. And the second part is following this merger, Motherson International will be Motherson Sumi, and there the ratio stands at 51 shares to 10. Yogesh, again, one of those companies which has been around for a really, really long time. What's your view on this development and will the prospects going ahead?
Agam, for Motherson Sumi, what my analysis says that reorganization plan for the business is just a step to consolidate their own watch on the balance sheet globally as well as domestically. So there is a simplification structure. Henceforth, I don't believe it will be anything positive for investors per se, because the global outlook on the business, they've got an N number of subsidiaries, pan European countries. So in EU especially. So those are still struggling for the business, and the margins are around 8%. We have seen Q4 numbers as well. So overall business will remain under a tepid zone for at least next financial year. However, the overall business, we see that harness business is getting demerged from the businesses. So I am valuing it at around 25 times Indian business. So on that front, the demerger, overall consolidated businesses, even if there is a demerge arm, 100 out of 100 rupees price right now, even the demerged entity will cost you 60. Ultimately, the balance holding company of Samvardhana and the PKC will remain at 40 rupees. So consolidated price will remain same. Domestic harness business is valuing at 25 times, which is on a higher side. So I don't foresee that it will be a value accretive for investors from here on at present. Maybe we can see a 117 to 120 rupees as a fair price for FY21 basis, and growth is not visible. So FY22 would be a different story once we are out of this situation on a global auto front.
Okay, that's a very interesting point of view. And of course, Yogesh has made some very valid points as well. But from there on, we move on to Axis Bank. And here the development is that it is looking to shut its UK operations. And in fact, it's also looking to surrender its UK banking license by the end of April 2021. And of course, the bank is suggesting that the whole rationale behind this is to focus on Indian banking operations. Yogesh, in uncertain times like these, perhaps not a surprising move, but let's talk about the holistic overall picture for Axis Bank. Where does it stand? How do you see this one investment opportunity?
Agam, for Axis Bank, I believe that global operation shutting is it has been done by Bank of Baroda also earlier in that context, 1.5 years back. And even Axis Bank, the UK operations are not much contribution to the overall business. The whole focus is India. So it is hardly 1% of the overall business. Shutting down would add, the cost cutting measures will add into the profitability right now. Overall, they have recently raised capital of around 12 to 15,000 crores recently this week, and the board meeting was there. What I believe is that it will increase that CET1 capital, tier 1 capital by at least 1.5%. The FY21 would be around 15% plus. So that is number one, and that will create buffer for ongoing pandemic situation where everyone is under analysis that projections are that the bad loans from 9% of overall book for entire banking entities will inch up to 11.5%. So creating that buffer by raising additional capital to curtail their NPA numbers, which are right now net NPA numbers are around 11,000 odd crores, and the CASA ratio is 41% with deposit of 64,000 crores, and loan book asset would be around 91,000 crores. So what I believe is that book value and hangover, yes, the hangover would be a sooty stake sale, and that's why the stock is in a suppressing mode. Once the hangover is over, we can see again back on track Axis Bank at 270 rupees current FY20 book value, and the FY21 would be around 290, and FY21 would be 310 to 320 rupees. So it is quoting at 1.4 to 1.3 times price to book, attractive investment valuation. NPAs are around, net NPAs are just 1.7% of the total book, which is manageable, and overall profitability for this company is around 6,000 crores on 7,000 crores on pre-profit operating basis. So it is not that they will not be able to cop up. So I believe that for investors, it's a good opportunity to lap up the stock around 400 to 425 current level, and can see a decent upside from here over 1.5 years.
Okay, well, valid points there as well, Yogesh. And on that note, I'd like to take a moment to thank you for joining us and taking us through those stocks which are in focus today. Thanks very much for joining in and leaning in. And thank you. And well, on that note, it's a wrap on this segment, but there's lots more lined up. Stay tuned to Bloomberg.